let's go straight away into the topics that we will cover today. Uh, with this esteemed panel, we will walk through the VSV 2.0 overview and also acquaint our audience with what's covered and what are the administrative procedures that are being prescribed around qualifying under the VSV scheme. We'll also look at some practical considerations for the scheme and also walk through clarifications that are being sought and suggestions that we are receiving from clients around us. With that, let me just kind of go on to the next slide and talk about the background a bit about the VSV scheme. Rule 6 of the FRBM Act requires the government to disclose the status of their assets and liabilities. And if one looks at the receipts budget this year, one sees the actual status and the extent of the cases that are pending. Almost 10 lakh crores of demands are in dispute. And consequently, this scheme is probably something which is very much awaited. It will help the government in achieving the objectives that it has around reducing litigation and achieving more tax certainty. In terms of actual numbers, there are almost 65,000 cases spread across the ITAT, High Courts, and the Supreme Court. And the pendency before the CIT appeals is also very, very significant. Almost 5.5 lakh appeals pending at the beginning of this year. Now, the government has attempted to do many things to kind of reduce this pendency. And one of the really good things that happened was the monetary thresholds for revenue appeals, which have been increased progressively. ITAT now at 60 lakhs, the High Court at 2 crores, and the Supreme Court at 5 crores. And that being put into effect immediately has already resulted in almost 500 cases being disposed of at the level of the Supreme Court. Now, the government has had its experience with VSV 1.0, and that obviously attracted a lot of taxpayers to move towards a settlement option. And consequently, VSV 2.0 is something that they are also probably looking at on building forward the success they had in the earlier scheme. Uh, the scope of VSV 2.0 is slightly limited as compared to VSV 1.0 because appeals that could be still filed because the due date is still pending can continue to have been filed under VSV 1.0 but are excluded out of scope in VSV 2.0. Now, what we are really looking forward to perhaps is a lot of the guidance which will come out in the practice and in the implementation of the scheme. And this guidance comes out in the form of FAQs, circulars that may be issued by the CBDT. So we'll be keenly watching those FAQs as and when they come as well. But with that, let me turn over the stage to Mr. Jindal to talk a little bit through the overview of the scheme and his comments around what is covered under VSV 2.0. Sir, over to you.
Yeah, thank you, Mr. Rohinton, and good afternoon to all the participants in the panel and those who have otherwise joined the webinar. So, Mr. Rohinton has given a little background of the VSV2, just to add little bit of details to it. So, you see, this government is one of the major goals of this government is reduction of litigation. And that has been reflected in a series of steps which the government has taken in last 4 years. So starting with faceless appeals, then DRC, the mechanism of DRC was institutionalized. The appellate forum of JC appeals was created. And then these limits for filing appeal to ITAT, High Court and Supreme Court, they have just been raised. So, and also on the administrative side, the government has given additional charges of CIT appeals to even principal commissioners. So that is primarily because one is the overall goal of the government to reduce litigation, and then the second thing is, as Mr. Rohinton has correctly mentioned, there is lot of pendency at the CIT appeal level, and because the challenge there is to reduce that pendency as quickly as possible. So that is why, because of all these considerations, this VSV2 has come. So to broadly give a framework of this VSV2, so what are the cases eligible? We have last time this the eligibility that was kind of no there were difficulty in like assigning a particular date. So last time it happened that persons who were not eligible, they came around and then they said that we may also be included in this VSV, and then the whole thing, no, it was not rolled out very clearly. So this time we have decided that let us give a cutoff date of 22nd July 2024. So whichever appeal is pending on 22nd July 24, that gets picked up, and otherwise it doesn't get picked up. So that way, at least those appeals which are pending on 22nd July, so those taxpayers who want to come in, because of that, the whole scheme doesn't suffer. So that is why a clear date has been given. And then those who are covered and those who are not covered. So one has to refer to section 89 of the direct tax Vivad se Vishwas scheme. This section 89 you will find in finance number 2 at 2024. So section 89 gives a definition of who is an appellant. And then section 96 of finance number 2 at 2024, it gives those cases, details of those cases which are not eligible for the scheme. So who is an appellant? One is that whose appeal as on 22nd July 2024 is pending at the High Court level, at the Supreme Court level, or at any appellate forum. Then second case is one who has filed his objections before the DRP, and then DRP has not issued any directions as on again 22nd July 2024. Then third case is where DRP has issued directions, but the assessing officer has not completed assessment on again 22nd July 2024. And then fourth case is where a person has gone in for a revision application under section 264, and that application is also pending on 22nd July. So these are the cases which are included, and what is not included is mentioned in section 96 of finance number 2 at 2024, and prominent of them is where search has been done and then assessment has been made in consequence to search under section 132. So that is not included. Second is where prosecution has been instituted on or before the date of filing of declaration. So again, that is also not included. And then third is where it relates to undisclosed income from a source located outside India or undisclosed asset located outside India. So that is the third. And then fourth is where the assessment or reassessment has been made on basis of information received under section 1990A of the Income Tax Act. So these are the broadly four cases, and there are other exclusions also, which we will not go into detail because they relate to no compliances with other acts like NDPS Act or COFEPOSA Act or PMLA or Prevention of Corruption. So for details, maybe one can refer to section 96 of Finance number 2 Act. So these are the cases which are not covered. Then I would just want to put it in perspective. There are four crucial dates in the scheme. So first date is 22nd July. The significance of 22nd July that I have already stated. So second date is the date when the scheme comes into force. So that notification CBDT has issued, and then the scheme is going to come into force from the 1st of October 2024. So that is the second date. The third date is 31st December 2024. Why this third date is crucial? Because any person who files a declaration on or before 31st December 2024, the settlement amount is a little less than a person who approaches the tax department for settlement of its appeal after 31st December 2024. So there is a difference of around, say, 10% in the settlement amount. So basically, one who files before 31st December 2024, for them, there is a different amount. And then one who files after that, the settlement amount increases by 10%. So again, there is one more fourth date would be the closing date that the CBDT will notify in due course when the scheme will come into close. So these are the 4 dates, and then this table one can refer to the basically there are 2 distinctions. The appellant also, there is one distinction in the nature of appellant. So an appellant who was eligible to approach for DT-VSV 2020. So that means he filed appeal before 31st January. He was eligible to come in VSV 1, but he has not come, and he continues to be at the same appellate forum as on 22nd July 2024 in respect of same tax areas. He is called an old appellant. And then the new appellant is one who has filed his appeal after 31st January 2020, but on or before 22nd July 2024. So old appellant and new appellant. So old appellant in terms of where the appeal relates to tax areas of there is a tax demand, then interest and penalty. So for old appellant means appeal filed here in this table. One can refer to 1I here. Appeal filed after 31st January 2020, but on or before 22nd July 2024. That means it's a new appellant. For the new appellant, before 31 December 2024, he pays 100% of disputed tax, then the penalty, interest, both of them, interest and penalty, they are waived off. So he just have to pay 100% of disputed tax. But if the new appellant comes after 31st December 2024, then he has to pay 110% of the disputed tax. Then 2I covers the old appellant. That means an appellant who was eligible for VSV 1 and he continues to be at the same appellant forum in respect of same tax area. So for him, it's a marginal difference of the settlement amount between the new appellant and old appellant. For old appellant, it's 100% of disputed tax before 31st December 2024 and 120%. That means again 10% difference between new and old. So if he files declaration after 1st January 2025, then 120%. So this is relating to tax, and where the appeal is not in relating to any substantial addition, but only in relation to interest or penalty or fee. So there the settlement amount is new appellant 25% before 31/12, 30% after 31/12, and old appellant 30% before 31/12 and 35% after 31/12/2024. So this is a broad table, but then where the appeal relates to income tax department, where the income tax department is in appeal relating to particular amount, there also the taxpayer can these amounts of disputed tax, they will be reduced by half in those cases. So this is one, and then second is wherever interest will not be, because suppose there is a case where the taxpayer has already, in respect of an appeal, he has paid taxes, he has paid interest, he has paid whatever. So that tax and interest would be adjusted against the settlement amount, and whatever extra, if any taxpayer has paid, that would be refunded to him, but without any interest. So for MAT and this carry forward of loss and depreciation, two options have been given to the taxpayer. So option is available to include the amount of tax relating to such lost depreciation and disputed taxes, or he can carry forward the reduced MAT credit also. So this is an option given. It was there in ESV1 also. It has been continued this time. So this is the broad scheme, broad framework of the settlement. And one essential feature that I wanted to speak about the forms which we have notified. Last time there were 5 forms. This time there are 4 forms for form 1, 2, 3, and 4. So form 1 is basically where the taxpayer files his declaration along with an undertaking. So last time the taxpayer had to file one declaration. Suppose a taxpayer is in dispute in 4 cases with the tax department. So he had to file one declaration for 4 disputes. But then the catch was that if there is some issue in one dispute, then his whole declaration, the certificate, it got held up because the tax department and the taxpayer, they could not agree on a particular tax payment, particular amount. So so this time what we have done, for every dispute, separate form 1 has to be filed by the taxpayer, so that if the taxpayer is in 4 disputes before the department, and then in one dispute there are some issues which are difficult to sort out, then at least other 3 issues they will get settled. So this is one essential change from the earlier scheme. So that is regarding the forms. Otherwise, the scheme of forms, they continue to be the same. The declarant, the appellant files a declaration in form 1. Then within 15 days, the department gives a certificate to the appellant in form 2. In form 3, he pays the settlement amount, and then the proof of filing of settlement amount he furnishes along with form 3, and then in form 4 that final order is issued. So that is the form. After form 1, form 2 is issued in 15 days. Then after form 2 is received by the taxpayer, within 15 days he can make the payment, and in next another 15 days the designated authority will issue form 4 to the appellant. All these forms will be enabled, allowed to be e-filed on the departmental e-filing portal of the department, and most likely they will come on 1st October. There may be a case that they might come on a few days later, but we are trying that all these 4 forms would be enabled on our website on the 1st of October itself. So if the appellant pays that settlement amount, then interest is waived off, penalty is waived off, any fee associated is waived off, and also he gets an immunity in respect of prosecution. So all these immunities are available to the taxpayer. So the government is hopeful that this is going out to be again a successful scheme, as VSV1 was there. We have tried to take care of issues which were there in the earlier scheme, and let's hope that this scheme will be a success. And regarding this clarification FAQs, we are working on it, and some of the issues have been raised by taxpayers. And as the scheme is rolled out on 1st October, I think there would be some issues which will come in the initial 3-4 days. So including those issues, we will try to come out with some detailed circular or FAQs guidance note within the first week of October itself. So that is from my side. So then I can be carried forward.
Yes. Thank you. Thank you very much, sir. And with that, let me invite Shobhan to take us through some of the salient features and his views on the scheme specifically. Shobhan?
Yeah, thanks, Rohinton, and good afternoon, everyone. So Pankaj has already introduced us to the scheme and talked about the way it is going to operate. I would start by saying, immunity from the law or immunity from any adverse consequence normally comes few and far between. But in case of tax disputes and in case of Vivad se Vishwas, we see 2.0 coming in, pretty quickly. The gap between the two schemes is not very long, and that perhaps reflects two things. One, as Pankaj said, the commitment of the government to try and reduce litigation through a bouquet of schemes, and I think VSB is one of the important schemes there. The second, perhaps, is also a reflection of litigation management in the department not being very efficient. If we look at the ITAT or the High Court, Supreme Court, I mean, cases are not that many, especially the ITAT has reduced its pendency hugely. But on the other hand, the institution of CIT appeal has somehow, appeals have kept mounting. And I think that's also one driver which forced the government to bring about VSB 2.0. Today, we have more than 5 lakh cases pending with the CIT appeals, despite there being more number of commissioner appeals than in the past. So I think somewhere that institution is not working very efficiently, and I'm sure the government is looking into it. But if we come to this scheme, I think the highlight is what are the immunities that we're talking about. So the first immunity, of course, as mentioned on the screen, is that the order passed by the designated authority is full and final. It's not going to be seen in any other proceeding. There's going to be no second look at it. Once that final order is given to the taxpayer, his disputes are settled and the taxpayer can focus on his business without bothering about this litigation or anyone else having a second look at his declarations. Immunity 2, of course, talks about that there is no offense, as was mentioned. There is no interest, there's no penalty, there's no prosecution. I think that is perhaps a very big icing on the cake, because there are many other dispute resolution mechanisms where we do not expressly get immunity from payment of interest or even facing penal charges from the government. So that's an advantage for taxpayers who opt for VSB. And another important point is this settlement where taxpayers come up and make a declaration and then pay up the taxes on the disputed amount or on the issues that have been disputed. This cannot be held as a precedent against the taxpayer. So tomorrow, if similar issues crop up and the government wants to take a view that you have already made a declaration under this scheme, that cannot be held against the taxpayers who have opted in for this immunity scheme. So I think that's also a good point. And taxpayers, of course, have to do a cost-benefit analysis to see whether what they're getting as an offering under VSB2 is that good enough. And if they feel that that would enable them to focus on business and get out of the litigation which has been happening for years, I'm sure most taxpayers would opt for that. But each case has its own peculiar facts that would need to be evaluated by the taxpayer in consultation with their management, leadership, and of course tax advisors. And once they realize that VSB offers them immunities and advantages which would be to their benefit, they would certainly go ahead and adopt this scheme. As you said, Rohinton, the scope of this scheme is slightly reduced, and I wish it would have been better. I also thought that government could have gone ahead and offered a slightly better settlement terms instead of the percentages that we see today, 100, 110, and for earlier appellants, 110 and 120% of the disputed tax. If that could have been a little lower, I think many more people perhaps would have been interested and excited. Because you see, there are huge demands. Even if we get immunity from interest payment and from penalty, in some cases, the taxpayer might feel that they have a very good case before the appellate forums, yet they want to come and settle. So had the rates been slightly lower, perhaps it could have been more attractive. That's my personal view. And of course, as Mr. Jindal said, we would look forward to the FAQs, because I'm sure in a scheme like this, when taxpayers come up and make declarations, there would be certain issues that would come up in implementation. And as he has promised, the CBDT would take all those into consideration and issue a set of FAQs or other clarification, which make it easier for taxpayers to comply with this scheme. And of course, we all would wait for the end date. I think that depends on how many people and how quickly people respond to this scheme and come in and make declarations. If the going is slow, I think the end date would be a little far off. But if large number of people actually come up and settle their past dues, then perhaps the end date could be a little earlier. But that's anyone's guess. We would wait for October to kick off how taxpayers react to this scheme. Rohinton?
Thanks very much, Shovan. So let me bring in Karishma now into the discussion. Karishma, we've already somewhat talked about the rules and forms. So why don't you talk about how the disputed amount is actually getting calculated and perhaps some of the practical considerations that we come across as part of the scheme?
Sure, thanks, Rohinton. So I think in terms of the manner of computation of the disputed amounts, there are the most common issue that we see is like if there is no carry forward of loss, so there's no MAT credit, then it's simple. Whatever is the disputed tax amount, you would pay that. But I think the manner of computing the disputed tax in case where there is a loss or unabsorbed depreciation or there's a MAT credit, the government has given two options. So this is quite similar to what was there in VSV1 as well. So one option is that, look, you could either carry forward, continue to show the losses the way they have been shown for the future years, right? And therefore that would not impact your subsequent years. And you decide and you don't take an adjustment for those losses in the year, the VSV year in which you're settling, and you just pay the tax. So that's option one. Option two is if you take this set off of the loss or the credit, MAT credit available in the year in which you're settling, then to that extent, that loss or credit is reduced in the subsequent years. And therefore, for the future years, the declarant then would be liable to pay the tax surcharge, cess, and interest as a consequence of the reduced amount of loss or unabsorbed depreciation or MAT credit. So these two options are given. I think one will need to evaluate in each facts as to what would suit the taxpayer. Does it make sense to not have a tax outflow and use the set off of loss if the interest computation for future years is not significant? Or is it better, if the interest implication for future years is significant, then is it better that you just pay the tax amount currently? So that calculation will have to be done by the taxpayer. Now, moving on to the practical considerations, I would say that, look, we always look at any settlement scheme from a tax angle because obviously that's the starting point. But there are a lot of practical considerations we have seen when we are speaking to clients, especially investors and stakeholders like the managing director or CXOs, which are not directly in charge of tax, but they are in charge of growing business, right? So many a times, in an M&A, what happens is there is a lot of discussion around when the due diligence process is happening. There's a discussion around what would be the tax liability, and there are often discussions or negotiations around valuations on the amounts and contingent liabilities arising out of tax. So I would say that, considering these practical aspects also is very important when you are evaluating your overall portfolio of matters which are pending and which are clogging your balance sheets in terms of contingent liability. So you also have the FIN 48 rules, you have the India GAAP requirements of disclosing contingent liabilities. And, when we were looking at it, I think 1,000+ companies, which are large companies, have actually high contingent liabilities in their balance sheets. Now, why would you want to? And today we are in an era where, most of the companies want to go into IPOs, want to get valuations which are good. So obviously, I think this is a great opportunity the way we look at it when we speak to the business folks. They say that, look, it's fine if you have to pay some tax, but these are the other benefits, that you would see in terms of clearing up your audits, balance sheets, getting better valuations. And ultimately, you're also developing a relationship of trust with the tax department. Nobody likes disputes. And I think that is what, at the end of the day, disputes do not enable growth either for the taxpayer or for the country. So I think it's good that the government is focusing on various efforts in terms of reducing litigation. And I think this is one scheme where I think we need to look at both the tax and the non-tax considerations, when you look at it from a settlement perspective. Now, the other practical things which the taxpayer must or can keep into consideration is that look, what is the what is the current situation? There are many taxpayers who actually are in appeals and who are also, let's say, pursuing an APA, right, like an advanced pricing agreement. So, does like an APA is also, we have seen, is taking a fair bit of time now to conclude because of the resource constraints at the government end. So I think one also needs to look at a view from an holistic litigation strategy perspective as to what is the outcome that is going to be likely possible, right, under the various scenarios, whether it is when you're going to go in an appeal, whether you're going to go in an APA, how many years it is going to take, because if it's going to take you 20 years to settle disputes, do you really want to wait that long? Because currently the scheme is saying that, look, you just pay tax and interest and penalty would be waived off. The other important factor is that, look, if you decide to settle a particular year, it is also, the scheme also gives you immunity, as I think Shobhan sir mentioned, also Jindal sir mentioned, gives you immunity that this is not going to be taken as a precedent for future years. So you don't have to be scared that, look, if I'm going to settle in the scheme, it is going to be looked at as if that, this issue will then therefore also in future come to haunt you. So the future is completely different. There's an immunity on the scheme in that sense, from that perspective. A couple of areas which we have been discussing also with Jindal sir, and we've also given our recommendations. And one of the things I strongly believe is not having secondary adjustment, right, in the VSV scheme. I was just speaking to a colleague in Indonesia today, and he mentioned to me that, look, in Indonesia, there is an incentive that is given by the government where if you decide to go in an APA, then there will be no secondary adjustment and there will be no penalties or interest for the rollback years. So that's a brilliant incentive that the Indonesian government is giving. Now, Indonesia, and like he actually started by saying that, look, our landscape is as litigious as India. Indonesian tax authorities are as aggressive. So I would encourage the government to consider such precedents and say that, why not? Because if on one hand you're saying that this is not an acceptance, it is a settlement, right? Then why should you have a secondary adjustment if somebody is settling under the VSV? So I think these are some of the points which we'll have to wait and see what comes out in the FAQs. I think it'll be good to hear from Jindal sir also, his thoughts on these specific areas, if there's anything happening, or then we have to wait for the FAQs.
Yeah, just to clarify that point. Whatever decisions are taken, they will be communicated formally only, because other than what has come in public domain, it is not for me to make any announcement or whatever upfront. So whatever is decided, that will come in public domain. So this secondary adjustment issue, it was flagged earlier also. It has been flagged today, and that will be considered how what we can do. So that is the only thing I can say.
Sure.
Sure. Thank you, sir. Let me cover the last slide on the non-tax considerations for opting for VSV. So some of them are pretty intuitive, right? You want to kind of put an end to litigation. You have unnecessary overhead in terms of keeping track of litigation. It's expensive. People who are in regular operations in companies get diverted into doing litigation. It's not really helpful for any income taxpayer. So definitely, cleaning up the balance sheet and, protracted litigation is something that would definitely be avoided. The important thing is also, many times when a company is looking at doing an M&A transaction or raising capital, usually contingent liabilities on the balance sheet automatically are value invasive. and they are adjusted against the value of the company. So there is an incentive actually for taxpayers not to have litigation pending in their balance sheets. So this also helps them ultimately improve their compliance position, improve their liquidity provision, and therefore mitigate some of the reputational risk that arises from that. With that, let's kind of get into some of the questions that have come on to the panel through the platform. And in case you have any questions, feel free to address them through the platform. There are a few questions which have already been logged in the system. And actually, the first one is a question that's actually been was going on in my head as well when Mr. Jindal talked about the fact that instead of having one single form, there would be multiple forms to file. So the question, sir, for you is that in the case of VSV 2.0, is there a provision or a possibility for a provision for partial settlement of the dispute? And what I mean by that is to settle some of the grounds and continue to pursue litigation for some other grounds for a particular assessment year. So is that possible, sir?
That is not there in scheme. That is not possible also, because the objective is to settle the litigation, not just settle some of the issues in a particular litigation. So if the litigation continues to be on the on the department this thing and for the taxpayer also, so that is something we have considered and we have not agreed upon. The government has not agreed upon that. So it has to be a settlement of the full dispute, not partial.
Thanks, sir, for that clarification. I'm sure many people had that question in their minds. Let me ask Karishma another question that has come up. What are the kinds of disputes where VSV would really look attractive? Is there a specific category of disputes which taxpayers should definitely pursue in the case of the scheme?
Yeah, I think so. I would say that first are the disputes definitely where you believe that, look, there is a lot of negative precedents now against your facts in terms of the judicial, landscape. So the first set of disputes that would come to your mind is that, look, if your chances of winning in appeals further is not more likely than not, right? And is less, then that's one category of disputes. Second category of disputes are disputes which we just spoke also a while back, where I think you don't really have a tax outflow. You can actually use your carry forward of losses. Let's say if losses are going to lapse in future, credits are going to lapse in future, then you might as well use them to settle your disputes, right? So that is the second category of the disputes. Third category of disputes is I would say where you may believe that on principal grounds you have a strong case, but let's say you don't have very great documentation or evidence to support. Fortunately or unfortunately, our courts, look at form as much as important as substance. So I would say that, and let me give you an example here. So for example, in transfer pricing cases, where you have intra-group service payments and management fees, right? This is the most litigious area in transfer pricing. And many a times there is a huge burden on the taxpayer to demonstrate the rendition of services and the benefit and the need test. Now, if the taxpayers do not have documentation to substantiate all this, while they may have a global policy, but let's say if they do not have great documentation to settle this, then maybe they may need to consider that, look, does it make sense to settle under VSP, other areas I would say is that, let's say if you are in a APA and you have also rollback, for example, and APA is offering you, let's say, a cost plus 17, and you are already you are at, say, cost plus 15, Now, if you were to settle in an APA, right, rollback, you would have an interest liability. As compared to that, let's say if you withdraw your rollback in APA and settle under VSV, if there are also appeals pending for certain years, then you may not have interest liability. You can then just settle the cases. So these are some examples, I would say, Rohinton, where people can very quickly look at VSV as an option.
Thanks very much, Karishma. The next question, Shobhan, I think it's got your name written on it. It says, how should taxpayers who are in the APA or the MAP program utilize VSV 2.0?
Right. So my view is, that there is perhaps greater scope for taxpayers to explore VSB as compared to MAP, and not so much in APS, though Karishma did point out that rollback years could be something from which taxpayers could withdraw. And that also, Karishma, I believe if, the taxpayer is in dispute only on transfer pricing issues, there could be other corporate tax issues where they could be on a very solid ground. Would taxpayers actually pay up the demand? They could decide to litigate, So it all depends on fact to fact. But I would believe, Rohinton, that in MAP cases, the difficulty in MAP cases is that while taxpayers do get substantial relief because the treaty partners exert a lot of pressure and negotiations on the Indian CA, there is no immunity from interest and penalty. While one would believe that MAP gives immunity from penalty, it's not so. And we have seen cases, though few and far between, where after the MAP has been settled, a penalty is being imposed. So you again get into the litigation cycle. So perhaps in some certain MAP cases which are taking long to resolve, where the interest burden is going to be very high, and where the Indian CA is perhaps not resolving certain types of cases under MAP. For example, all the PE issues and attribution, they are all stuck for many years. The AMP issues are stuck for many years. There perhaps opting for VSB makes greater sense. I would still believe that APA is on a different footing. APA is not about litigation removal, it's about dispute prevention. So proactively the taxpayer has reached out, and if there's a good negotiation, they'll get a very good outcome. There is complete protection from penalty. Of course, we are also advocating that APA should give relief from interest. That has not happened so far. But I would, between APAs and MAP, believe that taxpayers in MAP could give some time and understand the VSB scheme, do a cost benefit analysis, and perhaps opt for it. Not so much in APS.
Okay. Thanks, Shobhan. So there are two questions on the chat again, which I'll probably address towards you. The first question says, paid partially during VSV 1.0, will the credit of the same be allowed in VSV 2.0? Mr. Jindal, I mean, I think I know the answer, but perhaps you would want to clarify.
You just explain it again. Credit of 1.0 in 2.0.
That's right.
That I don't think that's quite
1.0. I mean, 1.0 payment would have been utilized in settling the dispute
1.0. So I don't know. It seems to be an odd question, but this has come up on the chat. There's another one which I think we have already clarified, but sir, you might want to just clarify again. We have to opt VSV only when appeal is filed and not in the case where appeal has not filed.
Yeah, that is the case. If the appeal is pending on 22nd July 2024, then only one can opt for VSV, except in a case where DRP has issued directions and then the assessing officer, the matter is with the assessing officer. So there one can opt for VSV. Otherwise, appeal has to be pending. Appeal or revision application, as I said in the starting. If a revision application is pending or DRP has issued corrections, and then the case is with the assessing officer, or the case is with DRP where directions are not issued, or where an appeal is pending on 22nd July. So just to clarify again, where the time limit for filing appeal is still there, but appeal has not been filed on 22nd July, those cases are not eligible in this. So key date is 22nd July. There one has to see whether my case was pending as on that date or not.
Right. So there's another question which has come up is that would the VSV 2.0 be available for cases assessed under 153C or 148? That is cases that have been taken up as a result of a search on another person. I think, again, we clarified somewhat, but if you could clarify this.
Yeah, again, I would again request participants to look at section 96 of Finance number 2 Act 2024. So section 96 clearly mentions that cases where assessments have been done in pursuance of search under section 132. So those cases, they are not eligible for this scheme. So that section 96, if they see, it very clearly lays out that persons or cases which are not eligible for this scheme. And this is one of the prominent this thing. The 132 cases where assessment has been done, whether 153A, whether assessment has been done under 153A or 153C or 143.3 or 144 or 147 on the basis of search initiated under section 152. So those cases are not eligible.
Okay. So there are a lot of questions around FAQs and when they will be released, but I think you had already clarified that this will be released in due course and you don't have a date put out on it yet.
We don't have a date, but then we are trying in first week of October, we would come out because as the scheme is rolled out on 1st October, so initial 3-4 days, there would be many issues which will come. So right now, if we come out with FAQs, it doesn't make that much sense because the scheme is yet to be rolled out. So first 3-4 days, whatever issues taxpayers they come up with. So we will try to first set of FAQs. We would try to include those issues and come out with some kind of guidance note in the first week of October 2024.
Okay. So another question that's come up is, will the department be able to process the Form 2 in 15 days? Since they would probably require some consideration by the officer. So you mentioned that it's going to all be online. So how will that work, sir? Will the 15 days be sacrosanct?
So again, two things I want to mention here. One is that separate form for separate dispute. So that in a way eases things for the taxpayer and also for the department. That is one. And second thing is we have this is the forms would be e-filed and e-filed, and as soon as it is filed, it would be available to the designated authority, the principal commissioner, the additional commissioner, and the assessing officer. All three of them, they would be able to see which all forms have come. So that kind of time lag is not there. Last time there were some issues regarding this also. So we have tried to sort out issues on this front, and we believe that because one form relates to one dispute only. So in that sense, 15 days would be a reasonable time period.
Okay. Karishma, let me ask you this next question because it talks about the experience in VSV 1.0. Question is, what has been your experience in VSV 1.0 concerning situations where settlement is possible without any cash outflow?
Yeah, so I think there has been a mixed kind of a feedback, but where settlement without cash outflow is concerned, the computation has to be approved by the designated authority. So there, in a couple of cases where it is straightforward, we have not seen a challenge. But where there were cases where which required rectification of appeals, or let's say which required some order giving effects to be passed, in those situations, or also in situations where there's no cash outflow, there can also be a situation like refunds were due and you're trying to adjust that. Those kind of situations, we did face a challenge. And, that is where I think this time also, if the government can, obviously they have simplified the forms, like instead of 5 forms, they've made it 4 forms. They've given specific timelines. I think if they can do something around even all these other procedural aspects, right, where if something is getting stuck at particular level and there is some escalation mechanism, or if refunds are due because of VSV, or some settlement has to happen, set off has to happen, and it's not happening, then I think that kind of a grievance cell. I mean, we do have the larger grievance cell and the CP gram, etc., under income tax. But I think something specifically for VSV, if it's carved out, then it will help, because I think timelines is very critical here. And if all these 15-day timelines have to be maintained, then I think we'll have to be a bit more swift on our feet this time, as compared to last time, I would say.
Okay. So again, another interesting question in the chat, sir. Does the department have the power to cancel our application under the scheme? I would say the word should have been reject, but this is what's said in the chat.
Actually, if we see the scheme, it is very clearly laid out. So the words used are not cancellation or rejection. It is kind of that the declaration. If you see section 91, subsection 5. So the declaration shall be deemed not to have been made. It is as if the declaration has not been made altogether if any of the conditions of the scheme have been violated, or any material particular which is furnished in the declaration is found to be false. So it is as if the declaration has not been made if any of the conditions is violated. So the question of cancellation and rejection, it doesn't arise. If otherwise the form and everything is in order, so I don't think there should be any issues.
Okay. I'll go through with final two questions, sir, because I know you need to leave at 5 o'clock. There's one very interesting question again in the chat around the situation where a writ against the section 148 notice is there. Will that get covered as part of VSV?
So writ against 148 notice, that is not a writ against. How will you calculate disputed demand on that writ? It is just on a procedural aspect. It has been challenged. The tax demand as such has not been challenged. So that way,
because there is no order as such.
There is no order as such. There is no order as such. So if appeal means if it is a if the writ is there against substantive demand, then obviously no, it will fall under its assembly. But then so if a notice has been issued and against the notice a taxpayer has gone into this, so there is no substantive demand as such which is there.
Right, sir. So the last question before we allow you to catch your flight. If both the quantum appeal and the penalty appeal is pending for adjudication and the assessee settles the quantum appeal under VSV, would the penalty order be automatically vacated?
Yeah, absolutely, because he has to give the details of that penalty in the declaration itself, and once he settles that disputed amount, so that penalty, interest, fee, everything will get settled. Everything will get settled. He does not have to pay anything on that penalty. So that is covered in the settlement. Penalty, fee, interest, all three of them, they are covered in the settlement amount of the substantive demand.
Thank you. And that was the final question we could take in the limited time we have. I would like to especially thank Mr. Jindal for the clarity and the way he addressed all the questions. I would also thank both our panelists, Karishma and Shobhan, for their detailed discussion, and all those participants who raised some really good questions for today's session. Thank you all. Back to you, Shiva.
Thank you. Thank you, everyone. Thank you, Mr. Rohinton, and Shobhan and Karishma, and all those who have.
Thank you, Pankaj.
Thank you.